All right, gentlemen, welcome. Thank you for having us, TOKEN2049 crew, and thank you for all the people who stayed back to listen to this session. Excited to talk to you folks about DAX, then the future of what public markets and crypto look like at this intersection. So I think let's kick it off by just explaining DAX to folks who may not be that familiar with it. Maybe we can start off with you, Jason, if you want to go for it. How do you explain what DATs are?
Yeah, absolutely. Well, first things first, for all of us here, DATs are publicly traded vehicles. And so do your own research. This isn't investment advice. I hate being the guy to have to say that, but it's a very important fact for all of us. But DATs are a way for foundations to actually work, or I should say L1s, to get access to the public markets. So we started off becoming foundations, or L1s became foundations because nobody wanted to be a security. We now have a regulatory regime in the United States where many of these L1s and L2s are not securities. And so this is a way for those for those to get to the public markets, to people that haven't normally or wouldn't normally be exposed to this. And so it's a very powerful vehicle. And so it's just a way for a public company to acquire large amounts of a cryptocurrency and then trade on a public market.
Great, that's a good definition. I guess the follow-up question would be, what are you seeing amongst institutional investors why can't they just set up an institutional account and buy the underlying asset directly? Or is it amongst retail can do the same thing? What is the net benefit that DATs bring? And maybe you guys have different strategies, so you can take turns to go through how you think about this.
I think the biggest thing is a plumbing issue. So when you think about large money managers, a lot of the financial system globally, they're built to handle stocks, bonds, commodities. They have risk systems, clearing systems, markets for that. Crypto is different to them. And if you haven't been, involved, it's almost a foreign language. And so now you've got a vehicle that fits into that model and gives those institutions a way to buy, to access markets, to express views. And so it's powerful in that because it's not about so much the front end as it is the back end.
Yeah, I think in addition to being, the plumbing issue, it's also a supply chain setup. The traditional, capital market is obviously very deep and has multiple segmentation. There's a debt market, there's a mezzanine market, there's a bond market. All of them obviously somewhat linked to the equity markets, which is deep and wide. So when you create an equity vehicle, that now is able to connect to all that supply chain in different forms and give people an exposure to that. If you think about this is a technical paradigm. And people want exposure, but through all these different instruments, it feeds their different needs. Some are doing asset liability, mismatch and hedging, so they don't have that exposure if they're just holding underlying. In addition to obviously all the operational infrastructure they have to build to even deal with that. So this is another way to give it to that, and obviously broadening access.
On that note, Cosmo, let's bring you in. I just want to understand how you folks got into it, given that you're not traditionally public market participants. Is that fair to say? Compared to perhaps the others on this panel or on a relative scale?
Yeah, I think one of the things, it was pretty exciting when we first saw the first DAT come to us. I actually spent most of my career as a public equities investor, and I think that's why DAT spoke to us in a way that it didn't for other crypto VCs when it started in early April. When I did the first deal, which was a Solana DAT, DeFi Dev Corp, then no one was giving the time of day. This was super non-consensus. I thought, wow, I really understand the equity wrapper because that's what I've done all my life, and only recently I've become a crypto convert. And there's a real way to bridge the two by doing this. I thought it'd be a one and done deal. Turns out, we say here, 150 pitches later, we made over $500 million investments in these things, that it's become what is now a massive industry because of exactly what Jason said, which is marrying TradFi and DeFi.
Okay, well, you folks are all doing Solana DATs, and so obviously nothing said here is investment advice, and you should do your own research, but clearly every marginal dollar looking to invest in such an API for accessing, let's say, these crypto assets are going to be, and you're competing for that marginal dollar between yourselves, right? And so keen to hear your pitch on why Solana and how you did this. Assume you're in CNBC, you're going to take turns, you have 60 seconds, they're short segments, and tell us why you picked Solana and why you're optimistic about the future, and your time starts now.
Well, I'll just say, look, we are almost at the cusp of this complete technical paradigm, right? Which is going to be the backbone of, at least we believe, a big new financial rails, new settlement rails, and potentially unlocking new business models. So now if you are a traditional investor, you want exposure to that, the similar way you're thinking about exposure to AI, you should be thinking about exposure to this equity. Solana is the best access to that, best environment, best computing environment to do that, fast, cheap, accessible. And if you want a productive economy leverage exposure, you have to go and find an equity vehicle which is taking advantage of that, which is Forward Industries. That's a team that's coming up with phenomenal stakeholders who are deep in technical R&D, understand the ecosystem built on top of that, and then go and derive value to the shareholder. So that's my pitch, and you can't miss that out.
All right, thank you very much. And you have also your Jump has also been involved in Solana's.
Yeah, that's my part of being the deeply technical. I mean, Jump is a prolific builder in the space. We are writing the Solana second by validator client, which is meant to bring immense scalability to serve payments, trading, and multiple use cases. So we are deep in it and understand the infrastructure pretty well.
All right, thank you. So, Jason, I'm going to put you on the spot next. Maybe a case about why Solana, and you can face the camera, which is the audience.
Yep, absolutely. Why Solana? If you think about blockchains are built to do certain things. And we feel that Solana is ideal for the financial ecosystem. Speed, throughput, all the on-chain metrics that you can look at, it allows it to be a solid backbone for the future of finance. We talk about innovation, we talk about things that are happening. We think that broadly crypto blockchains are going to change the way the world does business. And inside of finance, Solana is very well positioned to take advantage of that based on the way it's designed and based on the people that are already interested and invested. And so we think that is going to be the future of finance in a lot of ways.
Thank you very much, Jason. Cosmo, all yours in 3, 2, and go for it.
Yeah, look, when I think about what DATs are, it's really about advocating to a new audience, right? We're not, as much as everyone here knows what Solana is, the broader world doesn't. And so when I think about who we're trying to really attract at HSDT, we're trying to attract TradFi investors. And so when I put on that lens, it's like, what's the PM pitch that would make any of my friends at Tiger or Kotu or Tiger or Whale Rock or whoever, what would they care about? And in that sense, I go back to what was the biggest stock of my early career as an internet investor, as Amazon. Amazon was built on one thing, which is built on a very simple principle, what Jeff Bezos always said, which is there's this holy trinity of consumer wants. There are 3 things consumers want that will never change. They want faster, they want cheaper, they want more accessible. And that's what Solana is. Solana is faster than our existing rails, it's cheaper, it costs less than a fraction of a penny per transaction, and it's accessible. Anyone with a mobile phone and a smartphone connection can access Solana. So it's faster, cheaper, more accessible. That clarity of vision, that simplicity of thesis is what gives people conviction to make a long-term bet. And then specifically for TradFi guys, the only thing they care about is ultimately like, these assets all have to follow the laws of gravity, which means they have to produce free cash flow. And that's what makes Solana such a compelling pitch is I can go to someone and say, Solana is an asset that produces $2 billion of free cash flow. That's an incredibly large business. It's growing 200% year over year, and you're getting it for 50 times run rate earnings. Like that is a compelling pitch for a TradFi PM.
All right, can we give these gentlemen a round of applause for walking through their pitches? I put them on the spot a little bit, so thank you for indulging me in the audience. David, you're the founder of an ecosystem crypto native project, and so you're coming at it from sort of our early roots as a internet native startup ecosystem that is now meeting capital markets. Can you talk through what your expectations are from the DATs that are launching and how they can over time become ecosystem teams versus just a temporary phenomena in a bull market?
No, absolutely. When I started in 2021, this was like the era of pirates building on Solana. It was 75 developers was the meme back then. It was so desolate, and we were one of the few teams around. Fast forward 4 years, Solana is the beast it is today from what everyone's talked about. And I think this is a time where capital allocation becomes relevant. It becomes relevant when your fundamentals are strong. And every Solana team that started in 2021 went through a lot of shit. We got punched in the face, got back up, and here we are, finally ready for this serious wave of public market allocations. So when you peel back a crypto company or a protocol, you have a labs company, you have a foundation, and a foundation is a very bizarre entity. It's created largely for regulatory reasons. In my past life as a lawyer, these things were very much charitable organizations. So without the right home for tokens, foundations are created as a result of that. Now that's a very suboptimal vehicle to house anything in. You can't really market anything from a foundation. You can't talk about it. You can't sell about it. And you can't really commercialize that vehicle. And for the first time, you have all these DAT companies which can be publicly traded. These are securities. There's no arbitrage all of a sudden that has to be jumped over. And I think it touches a universe of investors and participants who historically haven't been able to touch crypto in the existing forms. So I think
what would you expect out of them? Like, how could they show the commitment to the Solana network like your team has shown by building since 2021? What is the reciprocal commitment? How could they commit to the network, perhaps channeling public market liquidity to on-chain liquidity or other ways?
I think it's simple. I think it's capital markets arbitrage. I feel like the rates that you're seeing on-chain are far superior. You have products like Athena, 20% APY. These are things that do not exist in TradFi, and then I use that word sort of cautiously. But there's a gap. There's so much rich on-chain yields that aren't discovered elsewhere, and I think it's a fantastic opportunity for all the allocators to obviously assess these opportunities and partake in it.
Yeah, so this brings up an interesting point, which is that, these are not like ETFs where, they're just buying the underlying and holding them. These are actively managed by a management team that is looking at the risk profile of a lot of these yields that, the average investor may not be, equipped to, sort of due diligence on. And so you're going to produce different outcomes between yourselves despite being what is a Solana DAT. Is that right?
Yes.
Yeah, I think what's really special, and going back to one of your earlier questions, is that what separates an ETF from a DAT is it's really passive versus active management.
Yep.
Right? Passive is great. You're welcome to go out there and buy spot passive SOL. But if you want active management, if you want firms like Jump, Galaxy, Pantera, managing your SOL, maximizing what we can do with it, not just on the yield side, but on the balance sheet side of raising capital to grow your Solana per share, that's why you invest in a DAT, and that's why they have the potential for meaningful outperformance over spot.
Yeah, and does this mean, I guess, like, I was going to come to you. Does this mean, we've seen a massive outperformance of passive index funds, just they're low cost, they massively outperform actively managed funds. And in fact, a lot of the actively managed funds shut down in the traditional, like equity bond, sort of like traditional asset portfolio. And except we have this weird world in crypto where active is the only thing that wins. There is no, like if you bought the top 10 market weighted thing from 2017, you don't have enough money to buy a ticket to this conference. So how does that, do you think active is making a comeback, and will crypto drive that in the public markets as well?
Look, I'm a U Chicago student, so kind of, efficient markets guy. In the broader capital markets or equity markets, it's a very old and scalable system where with enough information aspects to it, and secondly, a very deep ecosystem that kind of plays along and contributes to it. So it's pretty difficult for the active guys to kind of go and play and win consistently against the large passive information which is widely available. Having said that, the on-chain economy is a brand new economy being built today, right? So both the kind of growth vectors that the on-chain products are being building right now and what you can do with it, the information is obviously a lot more prevalent in the guys who spend more time and have the risk appetite, hence being able to do with active management versus a broad set of folks who can have the tools to access the same information and more be able to make smart decisions about it. So active management to deal with this new built on-chain economy is going to be pretty important for at least foreseeable future. And at some point, hopefully, the goal of this thing is everyone accesses it in a simple, transparent way. And then maybe at that point, passive makes sense. So hence, there's a period of time where active is going to be a significantly, winning part of this thing.
Jason, do you think...
just one point on that really quick. There's also a structural thing. So if you think about ETFs, you have to be willing to meet your redemptions at any given point. And so you can't deploy that capital. Even if it's something as passive as staking, transaction propagation, et cetera, you can't do that, right? Because somebody can show up tomorrow and say, I need to redeem my money. And you have to offer that. A vehicle like that doesn't have that. It's captive money, and so it can accumulate SOL per share in this case, but it also doesn't need to worry about meeting redemptions at any given point. It might trade at a discount, it might trade at a premium, and there are things that as the management of a company that you can do to counteract that, but you can deploy it, and so it's a better vehicle. I truly believe, like if you had asked me 6 months ago, I hated DATs. As I've looked at it and I've thought about it, I think that DATs are going to do to ETFs what ETFs did to closed-end funds and mutual funds. Because of that, now...
Sorry, can you explain that?
So ETFs were a better vehicle than closed-end funds and mutual funds. I think that DATs, generally, it's going to start with crypto because we're the most innovative, but there's a world where why would you want to buy a gold ETF that just sits there and bleeds a little bit when you can buy a gold DAT that actually does something that maybe produces a little bit of yield. And where you'll see the differentiation is that risk profile. There will be DATs that will take a lot of risk, where they'll loop their strategy 10,000 times and you're levered to the hilt. And there'll be other ones that are going to be safe and easy, but are going to produce a better income stream than an ETF, or even potentially holding it and managing it yourself. You're outsourcing that for a very small fraction if done at scale.
Okay, well, from a retail investor's perspective, the 60-40 portfolio hasn't worked for a while now, at least for 5 years, something like this, where the 40 part of the bond portfolio was supposed to be, risk-free return. It's ended up being a return-free risk because of inflation trading higher than, nominal yields. So do they where does this fit in? Like, is it the bond part of the portfolio that they start to shave away at to get these sort of alternative assets in? Obviously, again, this is not investment advice, just intellectually, how does an investor think about portfolio allocation? Because they're seeing these coins, they're seeing ETFs, they're seeing DATs. And by the way, Goldman Sachs had a report recently where family offices are where the allocation for various family offices are between equity, bonds, real estate, and crypto is in others. It's not even in alternatives, it's in others. And so clearly, this is meant to be a very small part of an overall portfolio. So how do you think through that? Where does that fit in?
Yeah, look, I mean, from my perspective, this still fits in your, the growth part of the portfolio. It's just an alternative asset in the growth segment, a net new segment. If you're investing in utilities, you have a huge allocation in tech, hopefully, and this is an additional growth vector that's coming up, and it's going to obviously be penetrating into mainstream. So you should be thinking about that. Now, within that, the decision between you at the first case, you have to take a decision that you want exposure to crypto, and within crypto, you have exposure to productive type of economies like Solana and others who are building new ecosystems on top of it. Then you have to make a decision that you would just want to buy a passive asset and sit on it, or you want to also then benefit in all the productive economy built on this, which is what the DATs can expose.
So the growth part of the portfolio, perhaps some income.
That's right.
Okay. Jason?
Yeah, I would agree. I think that one of the dangers that we've had in crypto broadly for a long time is trying to fit it into a box. Is it an equity? Is it a commodity? Is it a currency? It is the fusion of finance and technology. And so it's unique. And I think it's an important part of people's portfolios when you think about where the world's going. If the two big tenets of the world today are AI and blockchain, it's an important part of any portfolio. And so you have to think through that. And then you have to think through how do you want to express that in your portfolio? Do you want to take the time to stake, to unstake, to restake, to do other things like that? Or do you want to let someone do that for you for a fraction of the cost? But it should definitely be a part of your portfolio always. And I think people are waking up to that.
Yeah.
Okay. Cosmo, go for it, please.
Yeah, a lot of what I do is talking to our institutional clients like endowments, pension funds, allocators. And I think a big sea shift that's happened this year, and what we're seeing that DATs are a part of theme of, is the equity market's embrace of digital assets. I think you're seeing that the performance of Coinbase and Robinhood wildly outperforming the S&P 500. You see that in IPOs, whether it's Circle, Figure, Pantera portfolio companies doing extremely well after IPO, or the emergence of DATs and the strong amount of demand. And I think the biggest catalyst that is not talked enough about was the inclusion of Coinbase into the S&P 500. Every allocator that I talk to has a benchmark, and S&P 500 is one of them. Before this year, you could choose to ignore crypto because it wasn't in it. But all of a sudden, beginning in May, every single allocator, every day when they wake up, is choosing to be underweight, overweight, or equal weight crypto, and they're choosing to be overweight.
Okay. Well, there's this new sort of Larry Fink has talked about replacing the 60-40 with 60-20-20, where 20 is alternatives. And do you see crypto forming? Will crypto be a part of onboarding those alternative assets? Will DATs play a role in that? In other words, these are getting tokenized. This alternative assets are getting tokenized actually on Solana, which is part of why perhaps many of you are bullish on just the network being able to support finance, because it's becoming a place for price discovery of alternative assets. So if DATs were to choose to diversify outside of Sol, the asset, into other ecosystem plays, what would that look like? And perhaps you're likely to have different strategies. So the more specific you can get, the better. So maybe start with you, Cosmo.
Yeah, I think the most important thing to realize is that DATs are what makes them special is their ability to tap the capital markets in a meaningful way. And there are different market caps at which you unlock, what bankers will call the Chinese menu of options that are available to you. And so most DATs, you really have to reach $3, $4, $5 billion market cap before you actually get to hit the regular way convertible debt market, be able to sell preferreds in large enough chunks. And if you think about a $3, $4, $5 billion debt, the reality is you probably need your token FDV to be at least 20 plus. And so there's not going to be that many tokens that reach that micro-strategy like Flywheel outcome, because they need to hit that 3, 4, 5 billion in market cap. That said, we encourage all of our portfolio companies to think about launching a DAT, because what better way is there to create a permanent capital vehicle that can advocate for your system?
Wait, would you be open to acquiring? I'm asking your question, David. That's been on your mind. So for you, would you at some point consider acquiring tokens that our friend here on stage has created the flywheel for the DeFi markets that represents drift?
I'd say never say never. At HSTT, the goal is to maximize shareholder value. And we believe right now, today, that means being the strongest advocates we can be for Solana. Solana is something drift is something that we are incredibly excited about, but Solana is still something that hasn't even been talked about enough to TradFi investors. So we got to start there. We got to talk about why Solana is such an incredible investment for all the reasons these gentlemen have said. And then, when it makes sense, it might make sense to diversify.
I think that's where the ecosystem piece comes into play. Even for Ford, that was tokenized with Superstate and then eventually listed on Drift and used as collateral. It's the first of its kind, never done before. And I think it's really the convergence of TradFi, DeFi. I think in the future, the standard is pretty clear. Token like Drift, Camino, Jito has to outperform the beta of Solana at the very core. Ultimately, all these allocators getting assessed on the ability to track Sol, and it has to outperform that. If it doesn't do that, if Drift is not able to do that, then we shouldn't be part of it. But if we can show that our free cash flows, which I think this year is on track for 50 million, is able to do that, then we have a place at the table. Otherwise, we are default dead.
Yeah, that's incredible. And that's partially, that's to your credit, you folks have built an exceptional product. It's just that you needed a few strokes of a pen to be able to pass on the fruits of the enterprise to the token holders. And hopefully with the regulatory progress we're seeing in the US, that sort of starts to become the norm. And there's financial engineering of buyback and burn, but there's probably more direct ways to pass it on. If they did, I guess the opportunity opens up for DATs to do that. Jason, coming to you, how specific can you get on your strategy and how it's different from the other two on this panel?
So I can get some specificity, and some I have to be a little more opaque. But I think that
Press-trained.
A little bit of a political answer for you there. I think when you think through how you're going to acquire more SOL per share, right? There's certain things that you can do today which are fairly transparent to the market with regards to whether it's staking, block building, transaction propagation, things of that nature. And then I think that you move farther downstream where you're doing more things that are on chain, that are in true DeFi native. And there's a possibility to the question where you acquire some of those ecosystem companies, because the goal is more in this case more SOL per share. Like, what better way to do that than to find those people doing interesting, exciting things in the ecosystem and either investing in them or acquiring them and folding them into your broader strategy. So when we think through forward industries, we're looking through the entire Chinese menu, to use Cosmo's comments, to find a way to actually win the game, right? And it doesn't mean that there's going to be one winner. There can be many winners who appeal to investors, right, for a specific outcome. but I think that you have to be willing to do pretty much anything to, increase that shareholder value.
Awesome. Well, you have $50 million in free cash flow right across.
Yeah, we're done waiting.
So welcome to you. Anything you can say about how what strategies you're deploying that's different from everybody else on this panel?
Yeah, again, it can be too specific. Again, there's the management team, and they're going to be deciding a bunch of kind of key core things. But for the success of these vehicles, again, permanent capital vehicle is kind of the best way to think about them. What matters is scale.
Yep.
Skill, and then execution. If you again look, the one that Jump has been kind of stakeholder, this is the largest Solana Treasury vehicle out there, so scale matters. As Cosmo said, to be able to go access other pools of cheaper cost of capital to play that cost of capital arbitrage. So we are on that game, and we're going to continue to keep scaling it up. This is probably the best team in terms of both knowing the R&D, access to TradFi markets, knowing the multiple stakeholders and projects building on top of it, and then we could execute. We're building a strong team, and within those strategies, I think we're going to look at everything, and the team is going to look at everything that's available. Again, leverage, cost of capital, different financial instruments, but obviously a big focus in the long term is going to be bringing the value of the productive economy back to the shareholders.
Got it. If let's do the bear case real quick. If you woke up a year from now and found out that 90% of the DATs on public markets have gone to zero, well, I guess they've been forced to sell the assets and redeem at par. Is that roughly what blowing up looks like? Or perhaps they just blew up quite literally. Why would that be? And how can investors apply an adversarial lens while thinking about these things, while having an optimistic view about Solana and its ecosystem and its growth?
Well, look, when we first started making these investments, I didn't expect there to be 3, 4, 5, 6, Bitcoin DATs. But when that did happen, it became clear to me that the end of the story will be there might be 2, maybe 3 scaled DATs for each of the large cap assets, and the others probably won't earn their keep, and they'll trade at NAV or a discount to NAV, and that's an excellent opportunity for consolidation. I think anyone who came into this thinking that every single DAT will succeed just doesn't know how, didn't remember this is how startups work, which is that the vast majority aren't supposed to succeed. The vast majority are supposed to fail, and that's natural, that's healthy, but the strong ones will survive and consolidate, and that'll be great for Solana and for investors.
Yeah, I think that you're looking at a couple different outcomes, right? One is everyone tries to buy back their stock by selling the base asset and try to converge, the discount. Or you're going to look at history doesn't repeat itself, but it rhymes situation where we look at the 80s and the corporate raiders, the KKRs and so on, who will come in, and if their cost of capital is cheaper than the discount, they'll acquire these and either break them up, which also means that the larger DATs who are doing well and who are trading closer to NAV will also be part of that, apex predator where they're accumulating them. And so there is this financial gravity that will happen, and that consolidation will happen, and it is healthy. It is something that's supposed to happen in all financial ecosystems.
Okay. This brings me to something that I've been thinking about, which is I started as I was kind of ambivalent about DATs. It's this is late stage financialization stuff. But as I thought about it more, it's, growth has outperformed value over the last 15 to 20 years, right? If you invest in growth stocks, all the disciplined businesses that are like utilities, banks, these are companies that print cash flow, but haven't been rewarded by public markets. The companies that have been rewarded are ones with a massive growth story. And I wonder if there is a world where value makes a comeback, because every value company is a DAT in the making, because if they manage their treasury better, they could potentially produce this sort of premium to NAV because they have the lowest cost of capital. They're producing cash flow. And what options do they have today? They can do dividends, but dividends are tax inefficient, taxed at the corporate structure and at the individual level. They could do, buy bonds. Bonds, they're losing money. Or they could, reinvest or buy back their own shares, which is kind of frowned upon, and you're reducing the float. So I'm curious so I've actually ended up in a world where I believe every company is a DAT, which makes me sound loony, but tell me I'm not, hopefully.
No, you're actually missing one interesting angle. The crypto natives in us. Why not tokenize it? Galaxy, we just tokenized our equity on Solana.
Yeah.
Now you tokenize it, and instead of a dividend, why isn't it an airdrop? Why can't you start to do things that actually make crypto start to overcome the TradFi ecosystem? We all know the blockchain is better. We all know that crypto is better. This is financial evolution. There will be things that allow this to happen. So when we tokenize forward, and I don't know when or how, we're going to work with regulators to make sure that it gets done correctly. But when that happens, why wouldn't you return value to your shareholders or token holders in that case through some other means? And so I think that you start to see the real goal of a DAT from our perspective is not to just look like TradFi, but actually make TradFi start to look a lot like crypto.
Okay.
I'll also say, I think
Sorry, just one moment. That's really cool, because what one of the things that Airbnb and Uber tried to do is try to give their drivers and hosts equity while they were going public, but the SEC rules didn't allow them to do so. But if it was a token, the marginal addition to a cap table is cost zero. It's on a coin table, so you can just airdrop these to millions of people regardless of where they live in the world. And so that's an interesting thing I want to come back to. Before that, Saurabh, you had something.
Yeah, I was going to say, the one fundamental difference in the analogy made value versus growth is that the value stocks go and basically focus on cash flow versus the growth. The permanent capital vehicles are going to be somewhat different, because the preservation here is the treasury management is around the underlying asset, which inherently is a growth asset. So you kind of are doing both, where you're doing a good treasury management to make it a value stock, but you have growth inherently embedded into it, versus cash is not growth, versus SOL is fundamentally. So it's a unique offering where this is the opportunity for these companies to provide a very good value wrapper on underlying kind of growth asset.
Yeah, and I mean, look, I'm not saying that a utilities company takes all its cash on the balance sheet and turns it into a crypto asset, but they could do with a part of it, like get off zero, right? And maybe that part of it, when they do that and announce it to public markets may reward them with a premium they didn't expect.
Right.
And that valuation premium is something that they've been fighting for in public markets for 15 years, losing to growth investors. And the outcomes of the ZERP era, I've lived my entire career in the ZERP era, and so I think there's like a new opportunity set for value investors that perhaps they may leverage the insights you've had on public markets. And I was curious, whether any of you are thinking about making treasury management as a service to companies that may seek to do so. Is this on the roadmap? Is this for the next cycle?
Well, it's something that we do with Galaxy for sure. We advise a lot of the DATs, and it's always a difficult thing because we have to walk many lines, right? I jokingly say I have to be everyone's friend, but that's what that's the job that you have to do. And so I think as you start to bring that expertise, which was one of the things that gave us the confidence to go and participate and sponsor, the Forward DAT, is we saw what worked, we saw what didn't work, and we continually see best efforts. And I think you can do that. It starts with crypto because we're the most innovative, but like I said earlier, it's going to extend to many other things, and there's certainly an opportunity to help people do that.
Okay, we're nearing the end of this, so this is going to be my last question. I'm going to take a second. 10 years from now, Solana has won in whatever way you describe it, because you're somewhat tethered to the success of Solana, the network. Can you describe in 10 years from now a scene, what that looks like? I can tell you mine to motivate it, so give you time to do this. Maybe you walk into a coffee shop, you really like the coffee shop. Today you might leave a tip to be a good patron to the coffee shop. In 5 years from now, there's going to be a QR code on the wall. You're going to scan it. You're going to buy a few shares of the coffee shop. There's just going to be tokens, because every company will be able to issue their equity trivially because regulations allow them to do so. And you get stream dividends on Solana every quarter, and you own a bunch of local businesses, right? We had 50% fewer public companies today than 30 years ago. So in the future, we're going to have 10,000 times. That's my vision. So we're going to start with you. We have about, say, a minute for all of us to cover this.
Yeah, look, I mean, you kind of stole, part of my vision. But I think on top of that, I think it's also a completely democratized access for all kind of financial products that are right now pretty much captured for the upper echelons. So a complete democratization of that access, and then also instant and cheap access for the capital for the broad base. I think Solana is a perfect asset to deliver that.
Awesome. Jason.
I think the biggest thing is you're not going to know in 10 years that Solana has won, because it's going to be ubiquitous in the sense that no matter what you do, you're not going to go into that coffee shop and say, I'm going to buy it with Sol, or you're going to buy it with your money. And that's really what the goal ultimately of the blockchain broadly is. That's how in 10 years you're gonna know Sol won, you're gonna know that crypto broadly won.
Awesome.
Yeah, people often ask me for my bold prediction, and I think 5 years from now, every single financial application on your phone will run on blockchain rails. But just like Jason said, you won't know it, and that's great, right? And so at HSDT, Solana Company, we're really focused on being that third leg of the stool with the Solana Foundation and the Solana Labs to really accelerate the growth of Solana's ecosystem so that we can realize that eventuality.
It's democratization and distribution, honestly, without you knowing. I feel like you'll interact with all these things in a way that's, I think, global and without boundaries, and you won't know. You could access this from Africa, you could use anything, and it'll just work, and it's going to be seamless and just like interconnected at a fundamental level. And I feel like that's like that global from day one, which right now we have a lot of regulatory barriers that block each country from another country. So I think that's the Solana bull case for me as a builder as well.
Amazing. Gentlemen, thank you very much. Thank you very much to this kind audience that stayed back.